The stock market got slammed yesterday, Friday, February 21st, 2025. Hi, my name is Joe Cantu. Ronald Liston and Joshua Carvalho and myself were all investment advisors with Cantu Tactical Wealth Management. You know, I was talking with Ronald last night, and we most likely were discussing the same question on your mind, and that is, will the stock market crash this coming week? So as we're conducting some of these analysis, he suggested to me, he says, Joe, why don't you make a video for the public to answer this exact question, will the stock market crash in the near future? So I did. Let's get started. So let me show you this graph of the stock market as represented by the S&P 500. It is a graph of the last 14 business days. For those podcast listeners, it is a picture of a red and green line moving up and down with a falling red line spiking down hard at the end. That is Friday, yesterday. In addition, there is a blue line representing a moving average indicator. If you notice, the market line remains above the moving average line for the last 14 business days. That is until the last day. Now, this is our proprietary stock market moving average indicator, and we use it to decide should we sell equity positions to reduce the risk for our client's account. Well, let me explain it a little bit differently. You see, we are tactical money managers as compared to strategic money managers. What is the main difference? The main difference is they use the buy and hold method of managing investment positions in a customer's account. You know, I kiddingly call it the buy and hope method. We, however, use sector rotation method, moving from one stock to the next. Furthermore, they use 40-year averages for asset allocations. We use current economic indicators with geopolitical information for our global tactical asset allocation and diversification in our accounts. In other words, if the stock market is falling, they most likely will tell you, just ride it out, as we say in Miami during hurricane season. While we actually sell equity positions to reduce our risk for our clients. So I will give you a look into the future to provide you our 2025 forecast, but to answer this question. But this requires us to look into the near-term past to receive some perspective on the strength or lack of strength of our economy. First, let's get into my time machine and let me take you back in time to understand a basic principle of the stock market, which will allow you to actually learn a skill in predicting a stock market's future long-term direction. That's right. This video will teach you a skill to learn the long-term direction in the stock market forecasting. So in our time machine, we have just landed in January 2022. So in order to, and I did that So you can gaze into a stock market selling off position. Notice how after a major sell-off, the stock market continues to drop. What was causing this sell-off? Well, a little history. If you remember, we had a supply chain problem coming out of COVID. And with not knowing when this issue was going to be resolved, it created, quote, uncertainty in the market. The Federal Reserve had begun raising interest rates 2 months before in November of 2021, and this created even more uncertainty as to the possible rising of the price of goods. The White House administration had restricted drilling, and fuel prices were astronomical. Prices in California were already above $6 a gallon with no end in sight. This created even more uncertainty. So with all of this uncertainty, the stock market decided to head south for hibernation, going down relatively steadily. So as we zoom in, you can see the stock market moving down. And you will notice the blue line moving average. Notice how the stock market crossed the blue line, moving down, and a couple of days later, it had a big drop. And it continued to drop. And you can see that the stock market continued to fall overall. It struggled to move up, but it does not cross that blue line. It continues to trade below the blue line and moving even much lower for over a month, or about a month, before it breaks out and moves up again. However, this is important to realize that here in 2025, the economy is so different than in 2022. With the supply chain issues and the Fed raising the interest rates and the economy still coming out of COVID, all of this uncertainty created a massive amount of volatility. Now let's advance in time to 2024. What created the volatility for the stock market in 2024? Well, we had uncertainty from the Ukraine war. We had uncertainty of even higher taxes. Again, we did not know who was going to control the government at the end of 2024. We already had high inflation, but the question was it going higher after the election, depending upon who won? We had a presidential election, if you remember, and by itself it created uncertainty. Need I say more? But the greatest volatility from the stock market was caused by an out-of-control mainstream media who sensationalized absolutely everything for ratings. And the stock market does not like uncertainty. So you have now learned that as a basic principle. And uncertainty creates volatility. You see, in order for the media to make money, they must have ratings. And they do not care if it comes from good news or bad news. As a matter of fact, bad news and fear create higher ratings. A good example in 2025 was the California brush fires. The news media pounced on this, always creating fear and uncertainty, which in turn created stock market volatility. So now let's look at the stock market in 2024. And you will notice this large degree of volatility. So much that there was 2 1,000-point days. However, the economy was so much different again in 2022. For example, the supply issues were resolved, and the Fed had completed a majority of its interest rate hikes. Business had recovered from COVID-19, and the human population in the United States had developed immunities, either through vaccines, blood transfusions, or natural processes in the body. In just 2 years, our country was so different. So in this graph, there's a little hidden truth to a critical telltale sign for the future outlook and possible direction for the market for us in 2025. But if we look at 2025, what created the volatility in 2024? Now we are moving in our time machine to October of 2024. And this chart provides a more clear visual concept of predicting the direction of the market by understanding the concept of, quote, certainty in the stock market. So on the graph, you will notice at the beginning of October of 2024, the stock market was relatively steady, trading above the blue line moving average. Why? Well, because the polls came out showing Vice President Kamala Harris was ahead. And so the news media blasted this information to kingdom come, and this provided a degree of certainty for the stock market. And the market likes certainty. So notice we had a good stock market direction. The direction was steady and it was up. Now in our case, it was above the moving average blue line. However, as it got closer to the election day, you will notice that the stock market line began to falter and to move down. Why? Because of, quote, uncertainty, not knowing who was going to be president. Now notice, once the outcome was determined that we had a president, that provided, quote, certainty. And the market shrugged off its volatility and began an upward trend direction. The stock market corrected itself, bounced above the blue line, and headed up. So follow me on this statement. So once there is certainty, the stock market will take its steady direction. So if the economy is good, it gets back on track, moving up despite volatility. However, if the economy is bad, it gets back on track, moving steadily down in a down direction with certainty provided. And if it's uncertainty, it leads to volatility. So now there are 2 factors to take into account. So for example, just as in the financial crisis of 2008, or more recently COVID 2020, the market knew that the economy was bad, with GDP moving down and earnings being affected because business was basically had stopped. It was non-existent. So the steady direction for the stock market was a straight move down. So the near-term stock market can be used as an example of a prediction of the stock market action, assuming the both fundamentals of both economies are relatively the same. So for example, if the economic indicators reveal a poor economy and certainty is provided, then the long-term trend of the stock market should continue to fall, but it should be a steady direction. Likewise, if the economic fundamentals indicate a good economy and certainty is provided, then the stock market should continue a steady direction upwards at some degree with less volatility. So let's see analyzing the market downturn in 2024. So if you look at this economy, it's more in line with 2025's economy. Now, analyzing this 1,000-point drop in 2024 leads us to believe there is a high possibility of a stock market rebound. Why? If you notice on the graph, there's a 1,000-point stock market drop, and it was resilient, and it had an immediate rebound to the upside. This is an indication of a strong economy and can be used as a near-term telltale sign for the future. So, also for your information, I will put the reason that the market fell 1,000 points, which created heightened anxiety and uncertainty, in the comments section below. We have arrived back from our journey in time to February 22nd, 2022, 2025. And we have stopped near the end of the stock market earnings season. So the economy has a good GDP report with an updated report card coming out this coming Thursday, February 27th, 2025. The jobs number and retail sales and industrial production numbers are all strong. So the magnitude of the S&P 500 earnings are strong as well. And also by reviewing the percentage of companies who are beating the earnings estimates of the S&P 500 during this earnings season helps provide us some guidance for a higher market ahead. Now, what is that number? And we have an internal secret number that we also use at the firm. But the number is 76%. And that's a really good number. 76% of the companies are beating earnings estimates. Our number is 72%. So how can you decipher that number of ours? It means that if more than 72% of the companies are reporting earnings that beat analyst expectations in the quarterly earnings seasons, then we believe that the stock market is moving to higher ground. Now, where did I develop that number? I've been testing that number and different numbers over my 34 years in the financial money management experience, and it seems to work. So we're going to have good markets ahead. So we have a big week of financial announcements. We have two major companies reporting earnings this week who are part of the Dow Jones Industrial Index. This is major because there are only 30 stocks in the index. There are two of the largest companies in America. Number one is Home Depot. And I believe with all the devastation in North Carolina and the California fires, it should hopefully have a positive impact on its earnings results. Number 2 is probably the most significant technology company on planet Earth today. It is a company who produces the self-learning AI chip and GPUs, graphic processing units. It is NVIDIA, who reports on Wednesday. In conclusion, we believe at Cantu Tactical Wealth Management, any one of these companies could possibly be a catalyst by providing, quote, certainty to the stock market and getting it back on track. We believe the stock market will rebound in a healthy way in the near future.
Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for 3 of the largest Wall Street firms as a stockbroker and portfolio manager. Over 10 years ago, he created Cantu Tactical Wealth Management, which actively balances and selects investments based on a tactical approach rather than the traditional strategic management method. Instead of the buy and hold philosophy, he believes in the pursuit of finding investments showing momentum, performance regardless of the direction of the market. His experience includes IRA accounts, 401k rollovers, trusts, endowments, defined benefit plans, 403bs, and 401k plans. Additionally, he served as a night college instructor for seniors, teaching high net worth retirement and estate planning for 14 years. Podcast views and personal opinions are for educational and entertainment purposes only and does not constitute a recommendation. Investing has risk of loss and you should consult with your own advisors for any financial decisions. Cantu Tactical Wealth Management and Joe Cantu are a fiduciary firm and registered investment advisor in the states of California, Florida, Georgia, and Texas, providing pure independent advice and money management.